control theory. Regarding latest U.S. Fed's announcement to stop the monthly purchase of bonds, so we really want to know, in your opinion, what will the Fed do next?
So you raise some interesting questions. The Fed has announced a policy a few years back of what's called forward guidance. And forward guidance is a statement by the Fed by the Federal Reserve about, in the future, what would it take for them to change certain courses of actions. In this particular set of circumstances, under what situations will they start to raise short-term interest rates? So forward guidance is their way of trying to at least resolve or avoid too much uncertainty about their future actions. In principle, forward guidance is a very good idea. Unfortunately, if you look at how it's been implemented, it's been somewhat erratic. Some of the statements about forward guidance have not been so transparent and clear, and have been vague about the contingencies under which they will act. I think recently those statements have become more informative and therefore more useful. So I'm not sure I can tell you anything better than what Janet Yellen, in her capacity as the head of the chairman, in her capacity as chairman, has informed us about Fed policy.
You're concerned about the uncertainty. So what kind of uncertainty, that is a major uncertainty, that the Fed should aware of?
The Fed faces what I like to think of as model uncertainty. That is, there's multiple models with different mechanisms by which their policies can influence the macroeconomy. And there's some uncertainty about which is the correct model. So they have to be concerned about a prudent way for them to approach policymaking is to see how their policies work under these alternative different models, and making sure that it can work well under the different type of modeling specifications.
Do you think that they are on the right way?
I think that the Fed is wise to be ending quantitative easing. They've done it in a quite predictable way, which I think is, which I also view as productive. As indicated before, I really think that the Fed alone is limited in what it can do. And so I really hope that we can shift our attention to the other elements of macro policy making that interact with what the Fed does. The fiscal challenges, as well as the financial market as constructing financial market oversight that's meaningful, transparent, and can nurture productive investment. I believe that to be really important.
Is there any financial risk that we should aware of, especially after QE ending?
From the U.S. economy are kind of less connected to the QE, which is almost come to an end. There's a little bit of uncertainty attached to the when the interest rate policies will change. I think there is some uncertainty attached to long-term inflation. There's not a lot of evidence that we're going to for inflationary concerns right now. There's a possibility that they could materialize in the future, given the rather unusual position of the Fed balance sheet. But so perhaps there's a little bit of uncertainty attached to long-term inflation. But I really hope that we can start reshifting our policy focus towards these other pieces, the fiscal policy piece and the financial market oversight piece. I think it's very important that the public not be responsible for subsidizing bank behavior when they are not performing well. And so there's the challenge is to design financial market oversight in ways that doesn't obligate the public to be doing excessive subsidizing of the financial sector. It's been, although I don't claim to be a complete expert in the Taiwanese economy, by looking at my understanding of the capitalization of the banking sector in Taiwan, makes it look like that the Taiwanese economy is in very good shape along that dimension, that the financial sector seems strong and seems robust, and so I think that the Taiwanese economy I think that's very good news for the Taiwanese economy.
As you answered before, you tell the audience that we should aware of the Fed will raise their interest rate in the future. So when do you expect that they will do that?
I can't give you a precise date on which it is because it's in some sense connected to to where the macroeconomy will be in the future. There has been, at least as I indicated, some optimistic news on in terms of the recovery in the United States. It's still not where we'd like it to be, but it's going to be based on kind of how quickly that recovery materializes and whether it finally starts becoming a robust recovery. This has been a really sluggish response overall out of the financial crisis. The rebound has been very slow, and we're finally starting to get some good macroeconomic news. So I expect sometime in the not too distant future, in the next couple of years, we'll start thinking about raising interest rates, but I can't tell you a precise date.
Could you please share with us your latest observation on systemic risks?
The venture that I've been working on, the overall project I've been working on, is about building better models that really capture these financial market macro interactions that are at the same time rich enough to be valuable for policymakers who have to design policies for implementing financial market oversight, for setting bank capital requirements, and assessing the performance of the financial sector. So what I hope is, maybe as we go forward in 4 or 5 or 6 years down the road, that we will be able to provide better sets of quantitative tools to help in this policy making.
Thank you very much.